Good morning, everyone. Welcome to Business Morning here on Channels Television. I'm John McQuarrie. Well, we start as usual from the global space. Oil prices were down on Tuesday as investors weigh the impact of U.S. tariffs on countries buying oil and gas from Venezuela against the effect of tariffs on industries such as automobiles on the global economy and oil demand. Crude prices, that's Brent crude today, is down 0.19% at $72.86 a barrel. WTI is down more than that, 0.2%. $68.97 a barrel. And we can tell you that I'm sure you have heard that threat from President Donald Trump. So now investors fear that Trump's various tariffs could slow the economy and curb oil demand. But the prospect of tighter U.S. sanctions on Venezuelan and Iranian oil, the latest yesterday said any country that buys Venezuelan oil would have a 25% secondary tariff from the U.S. on them. So this swift policy shifts is what many have called it. They make it difficult to take large positions, and it's also expected that WTI will stay around $70 for the rest of the year, with potential seasonal gains on the U.S. and other countries entering the driving season. The Trump administration also on Monday extended the deadline to May 27 for U.S. producer Chevron to wind down operations in Venezuela. Well, these are the factors driving the oil price at this time from the global space. Now we come to Nigeria, where the federal government has said that it is taking necessary steps to offset a 4.7 trillion naira debt owed power generation companies to avert a possible nationwide blackout. This came as stakeholders expressed fears that some power generation companies might be forced to shut down due to lack of liquidity in the sector unless there is an urgent intervention by the federal government to clear the debts to GenCos. However, the federal government said that it would do everything possible to prevent GenCos from shutting down their plants as the issue is getting attention. Recently, Transcorp Power Limited lamented that it was being owed about 650 billion naira for the power it generated, saying the lack of liquidity affected its ramp-up plans. In December 2024, it was reported that gas companies formally notified all GenCos of their planned suspension of gas supply due to mounting debts. However, the intervention of the federal government appeared to have saved the country from another darkness like the one witnessed in the first quarter of 2024. Now, the Federal Ministry of Communications, Innovation and Digital Economy has opened an investor consultation process, inviting private sector players to express interest in its planned special purpose vehicle to deploy 90,000 kilometers of fiber optic cables across the country. The ministry, led by Dr. Bosun Tijani, in a consultation document, said the initiative, dubbed Project Bridge, Building Resilient Digital Infrastructure for Growth, seeks to establish a nationwide fiber network to enhance connectivity, support economic growth, and drive digital transformation. It's noted that this project aims to boost broadband penetration and strengthen the country's digital infrastructure. Still in the month of March, the Association of Nigerian Women Business Network believe that the International Celebration of Women should be exhibited through empowerment of owners of small businesses. Well, this is the approach that they adopted for 2025, giving enlightenment to their members and non-members through a 7-week training. The month of March draws to a close. The celebration of women is still on the mind of many. One of them is the Association of Nigerian Women Business Network, and their focus is economic empowerment for entrepreneurs.
The theme of this year's celebration, Accelerate Action. resonates deeply with us as women entrepreneurs as we strive to accelerate our businesses, our careers, and our impact on the world. As we celebrate International Women's Day, we recognize the progress we have made in our various endeavors, but we also acknowledge the challenges that still lie ahead. We know that women continue to face barriers to equality, justice, and economic empowerment. But we also know that together we can overcome these challenges and create a brighter future for ourselves.
For the network, accelerating action means training them on how to practice bookkeeping and other forms of strategies for their businesses. It's also to set the women right for achievement and access to fund.
They are pitching their businesses. There are investors here, there are banks here, and there are grants. Those that are able to scale through will be given grants here today. And that's what we're talking about. When you empower a woman, you are not just empowering an individual. You are empowering her family, you are empowering her community, and by extension, you are empowering the nation. And that's what we are calling on everyone to do, especially our government. Beyond just talking, let's do. Let's be practical about it.
Calls to empower women are not new. While it seems to be catching on, the gap for empowerment and recognition still remains. Welcome back to Watching Business Morning. And yes, we're continuing in that sectoral review of the first quarter as we come to the end of the first quarter of 2025. Today, we're going to speak to a manufacturer, one that you're used to, but you know, he always has some facts to share with us, the Managing Director and Chief Executive Officer of Coleman Wires and Cables, Mr. George Onufowokon. Good morning and welcome to the program.
Good morning, Ine. Thank you for having me.
So if I remember correctly, I spoke with you, I think it was in December,
yes,
for review of the year, and you said we're making progress, even though when it comes to issues of gas for electricity, for instance, you thought that there was something that ought to be done. So having experienced 2025 now, this week we come to the end of the first quarter, how has the year treated you and your business?
I think the basic fact is that the year has gone the way we all expected. Initially, you have that first pushback, and we entered the year with a 1650 exchange rate, but it was already tailing down by the time we were getting to December, which is when we spoke. And I was on the view is hold your naira, and it actually has happened. Hold your naira has happened. Now, which is you're going to get a bit more stability on the naira, which has happened over the last 2 months, with the naira tailing down from appreciating from 1650 at a point
that is under 160.
16, yes, it went under 160, 15, and then we have a bit more stability. Now, the reality is that it's the stability that everybody would have to work with. And because we've been in the last 1.5 years through literally an unstable situation where we literally could not predict decision making in terms of business, in terms of any manufacturing. It was very difficult to take anything greater than a quarter basis decision. If you're taking a long-term based decision, you could not make it. But today, we're actually seeing people making now the strategic long-term decision and the strategic long-term investment, which has seen an increase in business. I don't think there'll be any manufacturer that will say in the first quarter they've not seen increases in terms of volumes, in terms of turnover, in terms of output and capacity development. We've seen a gradual increase between January till date. And that has now been predicated because now you have a sort of gap that you can predict between the exchange rate mechanism. So you have your 1500, up or down, it's 1500. Now, irrespective, it allows you to actually throw a percentage plus 1 or 2 or 3% up or down of the risk. And then it allows you to actually narrow down your decision making. So it has meant people actually going back to projects. For someone like me that is into manufacturing of cable, 15% of infrastructural spend is cable. So when I see an upside, I literally know that the market is moving the direction of believing that there's growth going to happen, and so people are spending on capex because cable is still part of your capex. You build a building, you build a factory, you put in the cable, it's still part of the capex. So we've started seeing some growth compared to it on both capacity, on both volumes and on figures. That is helping the market go the right direction. Now, how do we now go from where we are to actually sustaining that is really the key question.
Are you happy with where we are? Or you think we have just seen, because having stability is one thing, but actually being where you think we should be is another. I mean, the fear at first was uncertainty, the Naira could go one way or the other. Now we have the Naira under 1.16, and it's been like that for months, as you have noted. Is that where we should be? Can we just say, well, this is what we have, let's work with it, we can work with this comfortably?
I think today we're in what is called the new normal. You see,
so we have to accept it as a new normal.
Yes, so this is our new normal. 1.615 below is a new normal. Petrol at between 850 to 1,000 naira is a new normal. So when you actually have attained a new normal, everybody moves forward. It's when the abnormalities are still existing that you have inconsistencies in decision, inconsistencies in strategy. Now, but when now we've all accepted this new normal, and this new normal going forward is where we look, budget is set at 1,500. And when people were actually, when the Naira was appreciating and it was getting to 1,470, I said, look, this Naira is not going to go past 1.5. Someone argued with me. I said, look, it is really not in the interest of CBN to appreciate the Naira. The budget is set at 1.5. They've got a deficit of over 13 trillion. The more you appreciate that currency, the increase you have in your deficit. And that means you need to borrow more to actually make up the figures.
And debt servicing also increases.
It does. So it doesn't make sense. So for me, 2025 is a 1,500 year. So I've accepted that. And I think a lot of people have accepted that. What we need to now see that gives us comfort is certain things needs to now play the hand that they have to do. So first and foremost, you have manufacturers that depend on your fiscal policies. Now you have a fiscal measuring policy that you sign off every year. The last time we signed off a fiscal measuring policy is 2023. We missed 2024 gap. Now we have one with the Ministry of Finance and with the presidency that should have been signed since January for 2025. Because you see, that fiscal policy measuring tool allows us to move tariffs up or down based on how the manufacturers have perceived their businesses going or being protected. And that has a tariff committee, a tariff board that goes through a whole year of working through that to actually come up with what it should be. And if you don't implement it, you find that you're still creating gaps within the manufacturing sector. That's one. Secondly, you also have to be careful that we don't keep creating policies that take us back. We go forward and we go backward with taxes. Internal generated revenue is a good thing. No, the current Federal Financial Reporting Council issues that I think we've got the organized private sector literally screaming about it.
Yes, NECA did bring that up.
Yes, it's costing everybody a fortune. And I don't think it's the same way we came up with the custom issue. This has also, because someone slides it in when they're doing what is called an amendment on an act, and nobody sees it. But literally, and what they're actually doing is literally taking the actual figures back to 2022 and charging people 3 years backwards for something that literally they're implementing now. First, it is not supposed to be even charged to a private sector. Everybody's saying, yes, 30 billion in turnover. 30 billion in turnover in the last 2 years, if inflation base, it's literally 2 years ago, it's 10 billion naira. Now, but today, because of inflation, you've carried your turnover to 30 billion, and someone literally wants to charge the whole of the private sector, especially the manufacturing sector, and it doesn't help our
Have you had
case.
talks on this? Because I know it's just NECA I've really heard. I know
It's
NECA speaks for.
NECA doesn't speak for, because you have the organized private sector, which includes NECA, NASIMA, MAN, and the rest of them. There are about 6 of them in the organized private sector, and they've been making a lot of noise. I'm part of MAN, and literally that noise is very necessary, because it is not helping matters where you're actually penalizing businesses for trying to do well. The actual FRS rules were literally on the listed companies. But now you've moved it away from listed companies to actually be penalizing the actual private sector, where the majority of both your SME, medium-scale business and large grow from. Yeah, what we should be careful is we're discouraging disclosure. Let's not discourage disclosure. We're already penalizing the people that pay. You don't want to penalize them to the point where they actually do not disclose information. That's secondly. Now, when you look at the direction, where are the direction of the interest rate? Good thing is, now we've rebased inflation. Now, although for some of us, I think it's nomenclature. So it's just a figure. 10% down from 35% last year. And now we're at 24. When it was rebased, January was 24.48. Now we've got to 23.18 for February. Now, fantastic. Now, that's also changed the mind of everybody. Because now we all see that interest rate will drop. And that came out from the MPR, MPC meeting. MPR was held, which was predictable. Now, you can't have inflation at 23 or 24, MPC at 27.5, and the MPR at 27.5, and someone will actually increase it. So it's giving impetus to actually being able to, as I said, the new normal, being able to predict the exchange rate position, being able to predict your interest rate, being able to predict the market as it's going. We have stability, actually. Insecurity is not as bad as it used to be, so the market is actually now moving. So investment is coming back in. FIDs in the oil and gas has increased in numbers. FDIs are increasing. FPIs are also increasing.
Are they really?
Yes, because let's look at it.
That seems to be muted at this time, talking about FPI.
Oh, FPIs are increasing because let's look at it. Naira is stable. If I'm an investor, a Naira is stable at even 1,500. And I come in, I pick up your treasury bills today at around 25, 26, 24, even pick up any interest at 20. Take a 365 days position. There's no place in the world you'll get a 20. So if you take the plus or minus of the exchange rate risk, 2, 3, or 4%, left or right, and take it on the basis of the interest yield, you're still going to end up coming out with about 16%.
Maybe that's why, I mean, we know that yields were dropping, and then suddenly we heard the government was increasing yields, even after the hold position by the MPR, by the MPC, you know. So I guess it was just to get those FPIs in.
They want to get the FPIs in. Nigeria depends, a certain proportion of our reserves has always been held by FPIs. And we lost them over the last 5 years. We started gaining them back now. But we need that stability for now. When you look at it, that we need the stability for the economy to actually thrive. If we don't get it, the manufacturing sector or any sector will actually be having problems. Then you have places that we don't want pressure on the FX. The reality is any pressure on the FX changes everything from inflationary figures to all the type of figures you actually put on board. The reality is now some things that have to also play is the issue of the crude for Naira issue.
Yeah.
The minute you moved crude away from crude for Naira, you can see what happened to the FX positions immediately. Because you move everybody back to buying and needing $1.4 billion worth of crude oil per month. It puts another pressure. So we need to settle those matters between those buying it, manage those issues, manage the information flow so that anything that is happening this year, and for me, I've been an optimist of 2025, 2026 going forward. I believe the growth, we've just started the growth year. And the growth year that's starting in 2025, believe me, for me, is a continuous growth year going forward. As long as we keep the consistency in the new normal. So
Okay,
that is what.
and I guess one of the new normal will be the tax reform bill.
Correct.
We're expecting all the processes to be done by first half, and by second half. What was your expectation as we head towards the new tax regime in the country?
I think it's good for Nigeria. Dropping the tax
There,
rate.
there's been a lot of amendments and all of that.
Yes, it was bound to, because there were a lot of pushback on certain areas, because you have to be frank. Some states generate more taxes than the other. VAT is generated more in some states than the other, and certain areas became politicized. So if you take off those issues, from the business perspective, we're finally putting ourselves in looking at the businesses as an opportunity rather than as a way of being flogged to death. Now, the reality is now you're getting to a tax rate of 25% and below, and you're going to actually put it in a way where it's managed over the next couple of years. I think we're going in the right direction with the tax bill. Secondly, I think all the other underlying factors like the Financial Reporting Council issue, FRC issues, need to also come on that line and at least be suspended for now, the same way we suspended the issue with the customs. So let's allow the tax bill to work, then review all other ones that were, I'll call it under the table slot in, that we've had in the last few years with amendments of agencies and agencies laws that nobody noticed was going to happen. So what we need to do is to actually maintain consistencies in certain areas. Tax bill is a good thing. We have to commend Taiwo Oyedele and his team that actually got this thing, and really even the president for actually pushing it through, because it's a hard thing to actually swallow. But I think it's in the interest of this country to actually have that tax bill, but it's also in our interest to use it the right way to actually grow this economy as we've now just started doing.
Then one of the things you talked about was the price of gas. And I mean, I've heard other manufacturers talk about it. I wonder if it seems anything is going to be done about it.
The unfortunate effect is that they've not done anything about it.
And no talks or promises.
We're still fighting for it, and I think the manufacturing sector is fighting for it. For someone like me, I have 25 megawatts of power embedded that we've invested our money in. Other industries have done the same. But it does not make sense that we're still paying $8 plus per thousand square when we are selling this for $2 plus, and then we have discounted factors happening with some other industries, and you're not having unification. You're not making us competitive, really. And that's the fact of the matter. The argument 30 years ago, 40 years ago, was the investment in the pipeline. But the argument 40, 30 years ago was it's a 20-year payback. We're 30, 40 years now. I don't know what the payback is all about again. So let us make this gas cost effective. But I understand that the franchisees and the people pushing it love this high price. But we cannot grow this economy if we do not do this thing. I think the price of gas instantly should be halved. And then, but you have them, they've already done some things, let's be fair on them. If you have embedded power that you're actually selling power, the gas pricing is between $2.50 and about $3.50. Now, if you're giving embedded power that advantage, every manufacturer that has actually spent his own capital to buy and put those embedded power is no different from the guy embedding his power to sell to someone else. So you need to do the same thing. So the rule book for a sector should be the same book for the manufacturing sector. And that way we'll have a fair playing ground and be competitive enough to attract the right investment into this country. Because look, you've got gas, I've got power, and I've got it at $3.50. I will bring in my investment, and I would not mind investing in the infrastructure of power against my manufacturing sector at the same time.
Like backward integration and
Correct.
all of that. Thank you so much, Mr. Onofo Okon, Managing Director and Chief Executive Officer of Coleman Wires and Cables. We hope your optimism is sustained all through the second quarter.
I hope so too. Thank you.
All right, let's take a break now. When we come back, we'll look at the banking sector, still looking at the sectoral review. But first, for our DSTV viewers, we'll be handing you to Aquarium Consult Afro-Caribbean Investment Summit. Remember, we had a conversation with them on Business Morning last week. Well, the event is today at Abuja. So that's for our DSTV viewers. For other platforms, we'll see you after the break here on Business Morning. Stay with us. Welcome back to watching Business Morning right here on Channels Television. So while the first half or the first quarter of the year has come to an end or almost at the end, there still talks about how the budget is being implemented, especially now when we look at oil prices. It's less than $75, which is the target for the budget, and also the Naira. Well, the Naira is still around 1,005, even though it's lower than that. And this meeting of individuals from the economic sector look at this during one of their meetings.
Social cost of the reforms have been very, very high. Possibly going towards better.
It's a seminar to discuss the possible impacts of the 2025 budget on businesses and the economy generally. Conversations here are to explore how the planned spending can be efficiently implemented. The Chief Executive Officer of the Center for Promotion of Private Enterprises, Dr. Muda Yusuf, has his eyes on the private sector protection.
Market phase. That is the basis of government intervention in an economy. Because people tend to think that the private sector or the market can fix everything. Don't say leave everything to market forces, those are market forces. It penalizes, especially the vulnerable segments of society. It penalizes the real sector of the economy.
For the panelists, the issue of debt should be intentionally handled.
Because we know that one of the sources for government to raise revenue is looking at taxes. Now, yes, if you look at our tax to GDP ratio, of what the keynote speaker said, about 10% or thereabout. And the benchmark, according to the African AFGB, is about 15%. So we are still far.
Actually pay what he has taken. And in an economy like this, what you should expect is that with stable foreign reserve, the country needs not be able to, will be able to pay the outstanding debt. But in Nigeria, we have two factors playing in this particular issue. One, we have high exchange rate, and the second one is that we keep on getting fresh or borrowing.
For the host, the Director General of the Nigerian Institute of Social and Economic Research, Professor Anthony Atimbine, the goods and the seeming bads present opportunities that could be harnessed.
Any situation has both its downsides, but also has opportunities. And the point is for businesses to look at the opportunities that they can take advantage of under and during the implementation of the 2025 budget. Issues such as implementation, strict implementation, accountability, as well as transparency on the part of government have been raised here. And it will be good for government to also know that this will help to see to the success of the budget.
The Institute says there will be a policy brief that will be shared with the government as their contribution to a successful implementation of the 2025 budgets. All right, still continuing with our sectoral review, let's look at the banking sector now, especially after the impressive results from UBA, and waiting, of course, other results from the other, members of that, the banking sector. We're doing this with the Managing Director of Optimus by Afrinvest, Dr. Ayodeji Abel. Dr. Abel, good morning and welcome to the program.
Yeah, good morning. It's great to be here.
Great. So how would you judge the performance of the banks in the first quarter, looking at the numbers, the movements at the stock markets, and the recap activities which is still going on?
Okay. Interestingly, I'll say it's two mixed bags, if I would say that way, because it started on a very strong note. We saw the banks rally significantly with the anticipation people were expecting positive results. And we later on, towards the end of the quarter, which we are just approaching, we saw a little bit of correction because investors has anticipated and also factored in the expected dividend. So you would see that with the release, when we say the fugaz, that's the top five banks, UBA leading that pack yesterday. Investors had already also priced in the expectation of that dividend. So while it started on a very strong note, the excitement, but investors trying to look at the dividend yield, when you see the dividend yield or based on the dividend that was paid, would mean that not very attractive at that level. But for historical holders, yes, it's really going to be attractive for them. For those that bought 1 year ago, 2 years ago, would get a dividend yield of close to about 30, if not 40% for some of them. So I think that for the banking sector, it's been a very a mixed quarter for investors.
Yeah, so can we judge from UBA's result, perhaps most of the, at least the Fugas, do you think their results will follow this trend?
Yeah, so I'm optimistic that they will follow the trend. So if you look at part of what has characterized the result, you look at the UBA result, interest income, both core and non-core businesses grew significantly, and it's easily traceable to the increase in interest rate environment. The MPR was increased by almost 8.75 basis points, 8.75% rather, last year. So that also helped the interest rate environment, and the banks benefited from that. So, and you look at it, UBA, for instance, what we call CASA, the current account savings accounts for about 88% of their total deposit, which means that they're enjoying low cost funding. And as a result of that, they're able to benefit from the high interest rate environment. We feel that other banks within that sector will also follow that trend, and it's also going to be positive. So you see PAT of close to about 766 billion. That's really positive. One of their, I think, their highest so far. So it also states something about investors that have the ability to stay for the long term. And I think that it's really a positive one. And we saw that impact reflect on most of the banking stocks yesterday, though it was short-lived.
Mm. So with this now, well, bearing in mind that this is the result for full year 2024, can we say that the days of FX losses, in reports, can we say that perhaps we're getting close to the end of it?
Yeah, I would say that yes, because it's when we look at what is responsible for the FX losses is the significant depreciation of the naira. So what we're seeing now is when you look at the last 3 or 4 months, yeah, the up and down has not been, if you put plus or minus 5%. So that is really manageable. So we may not be seeing those huge FX losses, and that this is also what is also sending positive sentiment to consumer goods. A lot of them, even the FX losses, ate into their shareholders fund. But with the stability that we're seeing within the last 3, 4 months, that would also be a thing of the past.
All right. So, how would you say the banks have been doing? We saw FBN, sorry, they're no longer FBN Holding, First Hold Co now, oversubscription. That was, I think, late last week. So, looking at the recap journey, which I think will end about this time next year, how do you think they've been doing, the banks?
Yeah, with the publications or with the analysis of the result of the offers, both those that did rights and those that did public offer, it's been very positive. And what we're also seeing is a lot of also strategic investors also taking positions in some of the banks, those that see long-term prospects. So with part of what I think led to this success is the electronic public offer that was introduced, and that's really helped for a lot of the retail investors to participate, working with thanks to the NGX for enabling this. So allowed a lot of retail investors to participate. So I think that the journey so far on the capital raise has been positive, with looking at First Bank, the oversubscription around the right issue, and also the private placements that they also announced that they will also be raising. So that is also going to be positive, will provide significant funding. Currently banks are going through, when you look at the cash reserve ratio of about 50%, liquidity ratio of about 30%. So most of the deposits that the banks get, almost 50% has to go to the CBN. It means that, and when you also factor in liquidity ratio, there's less for lending. So buffering, when you also support your capital with this long-term capital, they would also be able to lend and able to participate in long-term lending, which would also give improved and impressive return in the medium to long term.
All right. So, what do we expect as we end this quarter? We've seen the stock market down on most of the sessions this quarter. What can we expect for the second quarter, and what can we see as a drive to rebound in the market?
I think what the market would be waiting for is to also see the first quarter results, which will also be due by end of this quarter, and that means by next month we'll be seeing the first quarter result of most of the banks. So that would also help significantly in shaping direction of the banks. So we also expect that once that is also very positive, the downside risk that we expect that we see this year is the reduction in interest rates. Like the banks benefited from that hike in interest rate last year. With the expected reduction in interest rate this year, that would also douse the expectation that the performance would be significantly higher. So for us, I think maybe we'll just be looking at single-digit growth rates. It will still be positive. Banks have always been able to know how to weather the storms, no matter how tough. We always see them finding ways for them to be able to navigate the choppy terrain. So it's still for long-term investors, when you see prices that when those banks are trading at very cheap prices, better to lock in and buy for long term. So just to wrap up on this, when you look at UBA, for instance, 4 years ago was trading at 510 naira. I think around 10 naira. So with a full year dividend of 5 naira. So if you have, if your cost is around 10 naira, even if it's at 20 naira, you can see the annual return that you'll be getting on your stock on a yearly basis, which is significantly higher than inflation. So these are ways that people build wealth. These are ways that you can hedge your portfolio against inflation by buying for the long term.
All right, looking at the long term, thank you so much, Dr. Ayodele, Managing Director, Optimus by AfriInvest.
Thank you for having me.
Let's take a break. When we come back, we'll head to the global space to stay with us. We'll head to the global space now with Laddie Williams. Laddie, good morning.
Yeah, so much happening in the global space, and it's all about Tesla, tariffs. But let's get what investors should be watching today in the global space. I will see it's, well, we're going to be looking out for some data now. U.S. consumer confidence in the U.S. The Conference Board's consumer confidence survey for March, that will be released today. Earlier, a similar preliminary survey from the University of Michigan showed a clear weakening in consumer confidence due to political uncertainty. Traders care about this data because financial confidence is a leading indicator of consumer spending, which accounts for a majority of overall economic activity. Can put up what we're expecting today. What to watch today? FOMC member Williams, he speaks today. That's the New York Fed President John Williams. He'll give remarks. Investors will be looking for clues on how U.S. Fed sees inflation. That's in coming months. Investors just want to know when the U.S. Fed are going to cut rates and if they're going to cut more than 2 times. If you can put up that for me. FOMC member Kugler is also speaking today. She's a Federal Reserve Board governor. That's Adriana Kugler. She'll be speaking on economic landscape and entrepreneurship. Then in Germany, the IFO business climate, investors will be looking out for the IFO business climate index, the monthly economic indicator published by the IFO Institute for Economic Research in Munich, Germany, that gauges the overall business sentiment and outlook in Germany based on surveys of German firms across various sectors. All right, moving away from what we're expecting today, Japan's 5-year government bond yield, that rises to the highest level since 2008. As Japan's 5-year government bond yield climbed by 1.165%, reaching its highest point since October 2008, and that's according to LESG data. The yield on the 10-year government bond increased by over 3 basis points, rising to 1.575%, approaching the highest level since late 2008. Meanwhile, the yield on the 30-year government bond that remained relatively unchanged at 2.601%. Then Tesla's in the news now. The Europe sales slumped 40% in February amid a weak demand as the electric car maker grappled with a steadily declining market share with tough competition and growing ire towards the company's CEO, that's Elon Musk. We know he's all about Doge right now, so investors are wondering if he has time for the company. Then, meanwhile, CEO of ARK Invest, Kathy Wood, she says Tesla stock will hit about $2,600 in the next 5 years. She remains bullish on Tesla Inc. and sees the electric vehicle maker racing to $2,600 per share in 5 years. Wood's forecast predicts Tesla's valuation at nearly 10 times from the current levels, about $270 per share, as the EV maker grapples with a severe drop in valuation over the past 4 months. The $2,600 forecast has been touted by ARK Invest in the past. Then shares of Hyundai Motors, the rallied in Seoul trade today after the South Korean car maker, along with U.S. President Donald Trump, announced a $21 billion investment in the U.S. Shares of the automaker jumped as much as 7.5% to 229,000 won, helping spur a 0.3% rise in the Kospi. And also talking about President Trump, he did say on Monday he would levy a 25% tariff across board on any country buying oil or gas from Venezuela, as he wages a deportation campaign against Venezuelans and slaps duties on a number of trading partners. Let's bring in Carlo Alberto de Casa now, external analyst with Swiss Quote. Great to have you on the show.
Thank you for inviting me. Thank you, my pleasure.
Right, so talk to me now. Which countries mostly buy oil from Venezuela? I know China is one major buyer there.
Yeah, we have China, not only China, India and other countries are buying oil from Venezuela. But basically, these can be seen as tariff against China, and can be a problem, of course, also for Venezuela. But the news of the tariff treated by Donald Trump is impacting the oil price, and what we're seeing is that market are expecting the tariff to start relatively soon, even if, as mentioned, China is the big target of this decision. Chinese equities has been under pressure this morning, and the country is the largest buyer from Venezuela, and markets were concerned by the new tariff threats from the White House. From a technical point of view, oil price is continued to rebound, and is now, I'm talking about the WTI, is approaching the $70 per barrel. From a technical point of view, the oil prices continue to rebound with the Brent above 73 and WTI approaching the $70 mark per barrel, as investors are fearing about the reduction of supply coming from Venezuela.
All right, so Carlo, that means this is definitely bullish for oil. This would take oil prices, higher, and we know President Donald Trump, he wants oil prices, to come down. Do you think he's going to go back on this?
Okay, of course, this is a bullish news for oil, but at the same time, in the current scenario, we have news which are pushing in a different direction because the fact that the administration of Trump extended Chevron deadline for Chevron for having more time for continue to import from Venezuela. At the same time, there are growing expectation from a peace between Russia and Ukraine, and if a resolution will be reached, of course we can have more export coming from Russia as well. Moreover, we should consider that, okay, for the time being, WTI is approaching the $70 per barrel, but the long-term demand and supply dynamics remain in favor of a cheaper oil, and this in good part already priced at the current level. But anyway, those expectations for cheaper oil in the long term are preventing bulls for continue to gain, are curbing the expectation from other gain from oil, as markets are betting that oil will remain relatively cheap in the medium long term. Also, this is also due from the possibility of growing supply from the US, of course.
Right, and definitely so much to look out for in the oil market. We're still watching WTI, sub $70. Let's see if that continues to hold. Well, thank you so much, Carlo Alberto de Casa, external analyst with Swiss Quotes. Thank you for coming on today.
Thank you for inviting me.
Right. All right, so this is definitely a very dramatic one, and we know at this point, the Dangote refinery, is importing oil, and I hope he doesn't have to go to Venezuela at some point. I know he likes the US WTI.
So I want to ask, I think it's now left for a country to choose if I want to trade with Venezuela and cut off the United States.
Exactly.
Because if I think that I need Venezuelan oil, then I wean myself of my trade with the United States.
Yes, you get 25%.
So what's the volume of trade or exports from Nigeria to the US? Right. So, I mean, if we really need, as Nigeria, if we really need Venezuelan oil, and perhaps it might come in cheaper with this sanction. Remember what happened to Russian oil?
Exactly.
So it might come in cheaper now. So if we can turn to Venezuelan oil and get it cheaper, after all, how many exports does Nigeria send to the United States? So I don't think we have a lot of...
that would be quite interesting, though. But I know Dangote Refinery is looking at more of Africa, at this point. Angola, at this point. But
with the tariffs and the secondary tariffs and the retaliatory tariffs and all of that, I mean, countries are beginning to regroup and choose who their trade partners are. Because if it's America first, then it has to be my country first.
Exactly.
So
every country trying to do first.
Even though it's to the detriment of the world.
Right.
But at least for now, it does seem that's what we have to deal with.
Yeah, new reality.
Exactly, as Mr. Nofokan said. All right, just before we let you go, tell you that there was a positive close at the NGX yesterday. We are back to the 105,000 level, 105,551.39. The market was up more than 0.5%. And we went from 65 to 66 trillion naira for the market cap. We hope that's sustained. Banking was a major driver yesterday. So yes, UBA came out with an impressive result, but we had, I believe it was GT Core that was up more than 3% and drove that counter in very far into the positive. Anita will be back. We'll be here at 1 p.m., about 1 p.m., to give you the intra-market numbers at that time, as well as Ladidabi Dorin Business Incorporated. I'll see you for the stock market report at 10 p.m. I'm Amy John Mekwa. Enjoy the rest of your day.